Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be speaking about the order flow, so the commitment of traders, which is what hedge funds and the big players, so institutions, are doing in the market and how they're shifting and moving their orders on USDJPY. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly structured zone. This area, in fact, was already acting as resistance back in 2022. It has continued to act ever since as a strong structure level for this market, first as resistance, preceding these two rejections to the downside. Then the market broke above the zone with this impulse, and what we know is that previous resistance, once it is broken to the upside, becomes support. The market retested it here as support and rejected it to the upside. Then the market broke back below the level, so the previous support was once again turned resistance, and the market just respected it last month as resistance. So from here, there is a possibility of seeing more bearish price action being created, essentially for the market to reject this monthly supply and resistance area. Dropping down on the weekly time frame, what do we see? Now here on the weekly, we can notice that if we follow the movement of the market, it is easy to identify first an impulse to the upside, then a correction, then the market tried continuing higher, it failed, it dropped lower, breaking below the support. At that point, this previous support is now turned resistance, because this level from here, this is where all this previous push to the upside started. Since the market now broke below the zone, this previous support is now turned resistance. So if the market will go and test this previous support and resistance, this is where there is a good probability of seeing a potential rejection to the downside. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the JPY, we can notice how with the last reports, net positions have been decreased in the long term, but in the very short term, we see a massive increase of net positions. In fact, we went from having minus 46k net positions to now minus 22k net positions. Now, what this means is that institutions are moving back to the bullish side for the JPY. But since all currencies on the spot are traded against the USD, if institutions are longing the JPY, they are essentially shorting USDJPY, because we're looking here at the data for JPY USD. So if institutions are longing JPY the USD, they are shorting USDJPY. Or an even simpler way of looking at this is if institutions are increasing their net positions on the JPY, they're making the JPY stronger, which obviously makes USDJPY weaker. So institutions at the moment are shorting USDJPY by longing the JPY. They have in fact added 8,600 longs just with the last report on the JPY and closed 15,000 shorts. So all of this makes USDJPY much weaker. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. Now, if we drop down on the daily time frame, what we can notice is that during all this push to the downside, there is one candle which is not related to the move, which is exactly this green candle here. This area is in fact previous daily support, which is now turned resistance. So if the market will now head inside of this area, this is the zone inside of which there is good probability to see even more institutional shorting, because this is the level from which, even when the market had a very strong bearish momentum anyway, new buyers came into this market. So it is a quite strong structure level. And since the market has now broken it to the downside and is approaching it as resistance, we have a good probability of seeing more accumulation of shorts inside of this zone, which at that point could further increase the probabilities of a potential push lower below the area. So if the market will reach this zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market at that point, I wouldn't be surprised to see a potential rejection to the downside, completing this daily impulse correction and impulse pattern to the downside. That definitely wouldn't surprise me. Now, all this general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg. In fact, if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website. Here, you can gain access to all my courses, so 26 plus sessions of courses that go from the very basics of becoming confident with charts to all the way to building automated trading algorithms using the MQL4 language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer to build and optimize those portfolios of strategies. So a lot of very interesting stuff that you really cannot afford to miss. You also have the possibility to gain access to the Trading Station software with Telegram notification integrations to really accelerate your learning and you're becoming confident with charts. You have the possibility to gain access to one-on-one private mentoring directly with me from your student dashboard, as well as the COT data software. And you also have the possibility as a student, this is only for already members, to gain access completely for free to my MT4 EA's algorithms for free again. And here, in fact, you can see that there is all the presentations of my algorithms. And if you continue to scroll down on the website, you will see that you have the possibility to gain automatically access with the email and password that you will create during the sign-up process. So definitely looking forward to see you on board and see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.